We have three main investment objectives. Firstly, to achieve a target profit of 75% within 2 months. Second, to manage risk tolerance, and lastly, to earn a steady stream of income.
Strategy employed. First of all, the strategy we employ is to choose the right stock to invest in. This is because to reduce the risk and avoid suffering significant losses. Next, the strategy we implement to set an appropriate time frame. We use intraday, buy today and sell tomorrow, and swing trading. Trading plan executed. The element of trading plan we use is setting the risk or reward ratio of stock in each stock investment. The stock risk or reward ratio is how much investors are willing to lose to get a profit in the stock. Next, we set each cut loss for each trade. When the stock price passes below the support price, the stock continues to be sold.
Now let's discuss about cut loss in investment. In the battle for investment survival, the first and most important lesson in the stock market today is the damage control. There are three techniques that we use in the investment game, which are the first one, to cut loss when the stock price starts to break the support level. Second one, cut loss when the price drop exceeding 7% of the purchase price. And last but not least, to cut loss when there are bad news about the company. Now let's go through them one by one. Firstly, to cut loss when the stock price starts to break the support level. Support is a level that holds the stock price from falling down. Usually, when the candlestick touches the support level, the stock price will bounce upwards. However, there are times when stock prices can also fall beyond support. So, breaking support is a strong sell signal for investors to cut losses. Stocks that usually break support when there is selling pressure from sellers. So we have decided to place cut loss 1 to 2 bits below the support level. This is because the stock also has the potential to make a rebound as soon as it touches the support level. The next technique is to cut losses when the price decreases exceeding 7% of the purchase price. While executing the trading plan, all the group members had already agreed to cut loss at 7% from the purchase price of our investments. From this, we learned that cutting losses can quickly prevent us from suffering devastating losses that are too steep to recover from. Considering the capital is as much as 500,000, then the total estimation loss of 7% from 500,000 is 35,000 ringgit. As a precaution and to be assured, we decide to calculate our risk and reward ratio first before entering the market to avoid having to cut losses. In this context, we invest in a certain company when the potential profit ratio is higher than our risk ratio. Last but not least, the last technique we applied is to cut loss when there is bad news about a company. We learned that it is actually better for us to avoid investing in a company with political relations too. Now looking at a recent example, the name of company Serba Dynamic is on May 25th, 2022, the company Serba Dynamic Holdings had an issue raised by external auditor KPMG Limited. So after being frozen for 2 days, the price of Serba Dynamic shares continued to experience a limit down. Did you know that the current price of Serba Dynamic today is 0.01 ringgit? So this fall is as much as 99.38%. Therefore, the lesson for us here is to cut losses as early as possible after the bad news. This is to avoid experience bigger losses.
Next, we proceed to the entry plan strategy. Firstly, an investor must make a research on which company they would like to make an investment. Second, identify any company that sell a lower market share price, or usually we call as penny stock. Usually this stock is below than 1 ringgit Malaysia. Next, determine a good entry point, also important before starting an investment. We can look at their chart movement or using the support and resistance to discover the pattern of the candlestick. Within that, we can manage to get a good starting point and share price before investing.
Exit strategy is critical for developing a profitable investment system, especially when the objective is to maximize profit while minimize loss. As a result, investors must be aware of exit plan strategy, risk money management, time frame, and exit style scenario. Money management is one of the most important aspects of trading. It can be completed in one of two ways: by take profit or stop loss. For instance, here are some holding periods. The first is high risk daily trading, which occur between minutes and hours, swing trading, which occur between hours and days, position trading, which occur between days and weeks, and investment, which occur between weeks and months, and it is a low risk. Every investor has their own method of doing things, as well as their own risk and reward. The following are some of the most common stock exit techniques. The first stage in this approach is to leave with strength or quality. Following that is exit on weakness. The third strategy is called by exiting on support. In conclusion, to offset capital gain, regardless of the circumstance, every stock exit plan needs to focus on minimize risk and maximize reward.
First of all, what is fundamental analysis? Fundamental analysis is a technique used to evaluate a security's intrinsic worth in investment by examining several macroeconomic and microeconomic elements. Fundamental analysis that our group uses is divided into two, which are growth investor and value investor. For growth investor strategy, companies are often created to expand, make money, and eventually return part of that money to shareholders. However, growth investor means they believe a company has a bright future if it first posts substantial revenue growth even if it doesn't make a profit. The stock price of fledgling company may begin to rise when investors determine that it has a cutting-edge offering or compelling competitive advantage. The company's stock price is more likely to increase as more investors join the fray. Compared to the value investor strategy that we use, value investors look for bigger, more existing companies that appear to be undervalued based on their sales or earnings per share. Value stocks typically trade at prices that are very cheap or below their book value, but they are also typically have low price to earning ratios and pay dividends that are above average. Value investing is sometimes defined as not just buying cheap stocks, but investing in great companies at a good price. Now, let's move to technical analysis strategy. Broadly speaking, by examining statistical trends gleaned from trading activity such as price, movement, and volume, technical analysis is a trading discipline used to assess investment and spot trading opportunities. For our group, we apply screen stocks by using technical analysis. To set up a screen, we consider some of the items. First and foremost, market capitalization and price. This can be an excellent place to start because it lets us immediately eliminate many stocks. For instance, we might remove stocks with a price exceeding the screen if you are not interested in them. Secondly, industry and sectors. If you want to go long, which involve purchasing a stock with the expectation that its price will rise, look for strong sectors and industry groups. If you want to go short, which involve borrowing and selling a stock whose price we believe will decline. Momentum comes last but not least. Typically, a technical trader seeks out strong, upward trending equities for potential purchases and weak, downward trending stock for possible short sales. Moving average, which are trend following indicators that smooth out daily price fluctuations to reveal a stock broad direction over time, and one approach to locating them. They may also serve as degree of support and resistance, where downward trends tend to lose strength is at support, where purchasing pressure prevails over selling pressure. As selling pressure overtakes purchasing demand, resistance is frequently where upward trends begin to halt.
Teamwork is the ability to work together as a group to accomplish a job or reach a common goal in the most effective and efficient way. While working on this project, we employ communication, decision-making, and responsibility. In conclusion, working as a team helps us to generate great stock investment outcomes through a collaborative method.
Now let's move to the profit gained from this investment game. Looking at the table, our overall accumulated profit is 8,034,829 ringgit 52 cents, meaning that we have successfully achieved the 75% target profit. We invested in various companies from different backgrounds such as energy companies, healthcare, industrials, telecommunication services companies, and much more. Some of our group members also invested in REITs such as KLCC Properties, Al Salam Real Estate, and much more. On my last words, successful trading practices in this game will not guarantee success when we begin trading real money. However, successful practices in this game do give us confidence in the system we are using. When the system is generating positive or negative results, we are able to learn and gain more experience in the stock market environment.